Well, Plymouth Industrial REIT, as you know, a little background, I guess, for Plymouth. We have about almost 40 million square feet of space across probably 6 major markets. We manage currently about 80% of that space is managed in-house with our own property managers. So we have an office in Boston, Memphis, Columbus is a large office for us, Atlanta, as well as Jacksonville, Florida. So across those 5 offices, we have our own property managers, asset managers. So that's about 215 buildings as we speak. Primarily looking for buildings that anywhere from 100,000 to 300,000 square feet. Now we own buildings a little smaller, and we own a few that are much larger than as well. But that's really our core. As far as the strategy is concerned, we are really looking at buying properties with shorter WALTs. That's really been our mainstay since day one. We currently sit at about 40% single tenant, 60% multi-tenant. We're somewhat agnostic to that. It's not our strategy to have one or the other. It's really about buying good quality real estate, primarily looking at the best locations. And we really like to look at our basis and our real estate. Certainly. So I joined the REIT business circa 1999, 2000. I was with another REIT for about 8 years. Really was introduced to REITs at that point. I had always been a private real estate person. The democratization of real estate, I really thought REITs were going to be the biggest thing the world's ever seen. And I think they've gotten much bigger. I don't think they've gotten to where I thought they were going to get. And I think, some of the passive investing that you're involved with and stuff has maybe taken that a little bit out. I just thought every person in the world would own a REIT. I continue to have people ask me what a REIT is. So we go through what a REIT is. So, I think the benefits of not just a REIT, but a public REIT, the permanent capital is really the primary driver of being a public company, right? You attract that permanent capital, you're able to grow for the long term. Our business is really about growing cash flow more so than it is IRR, right? I think if you buy the right properties and you grow the cash flow long term, if that's your vision, the IRR kind of takes care of itself, for the most part. So that's really the benefits of being a REIT. We started around 2011. We went public in June of 2017. So I think it's just a natural evolution. As you build out the portfolio and you get larger and larger, you take the company public, you continue to grow it primarily organically, 1 or 2 buildings at a time. We've done some major portfolios. We continue to announce those, but we really like to buy 1 or 2 properties at a time and drop them into the machine. So we think the long-term trends are still in play. I think we're in a little bit of a downtrend right now that I think is turning around fairly soon. The bull case is that logistics, the industrial demand that we're starting to see. The majority of our properties are in the area of the United States that we call the Golden Triangle, right? So loosely, that is from the Great Lakes over to Texas, over to Florida, and then back up. Not quite a perfect triangle. It jumps in to catch the Carolinas and up into Detroit in that area. So that Golden Triangle is where we think, and where the research proves out, that the majority of the reindustrialization, reshoring of manufacturing to the United States is going to take place in that Golden Triangle. That's where your infrastructure is. The future, I think, of real estate, especially industrial, is infrastructure. Where's the water? Where's the power, sewer? Where is the natural gas for electricity? Where's the infrastructure in play for rail? Where are the roads? And we're just not building new railroads. We're not building new interstates. We're certainly not building new ports necessarily. So, where is that? So we are big believers in this Golden Triangle. And so as you reshore, onshore, and you add into e-commerce, last mile, when you add all those things together, the drivers, we think for the next 5, 10, 20 years is that theme. We think that continues. And so we're positioning our capital for the long term to capture that. Okay. So the bear thesis, I think, is temporary. I think, it's now, there's been a significant sell-off across many REITs, including industrial, including us. And I think if you look at, the research where, new construction has come into play, and now that's dropping off a cliff. Absorption, I think that the research came out, I think it's preliminary, but based on the fourth quarter of 2024, we've had 60 quarters in a row of positive, net absorption of industrial space. I mean, that's never happened before, and I think I don't think it's happened in any other asset class to speak of. So, that really is, that bull case, if you will, is the exact opposite of the bear case. So we just push back and say we continue to, buy good properties at the right basis. We believe we're going to be collecting rents. We still believe in the short wall thesis. We're not nervous in the sense that we not need to go out and now buy long-term walls. We're not a net lease REIT. No, that's not what we do. So we do think that I think just pushing the bull case helps us overcome the bear case. So a couple of things. I mean, I think if you want a lot of access to the Golden Triangle, I think Plymouth is probably one of the only, pure play industrial REITs out there that's going to offer you that. Okay. I think that the next thing is if you look at where our stock price was, 90 to 120 days ago, and now you look where it is today. I don't think in industrial real estate, our portfolio, I know it hasn't declined by 25% in the last 90 to 120 days. If anything, it's probably gone up, half a basis point. So I think there's positivity in where we are. So I think if you take our forward NOI and you do a quick NAV calc, what's the net asset value of this company, it's significantly higher than where our stock price is today. So that's where I sleep very well at night. I don't really worry about the stock price day to day. I just worry about, are we buying the right buildings? Are we putting in the right tenants? Are we collecting rents? And I think the answer to all those things is yes. So I do think that the ultimate value of the company is there. I think we're going to continue to grow that value. We still have mark-to-market opportunities. As we sign a new lease, we're still putting in, 3.5% rent bumps every year. So that means our NOI is going to continue to grow. And I think we're going to continue to add value.